This is the Markets Club podcast with Joe Cap and Brian Hoops for Midwest Solution in Springfield, Missouri. I am talking with Joe Cap about the cash grains markets in central Illinois. This is Backroads of Illinois server to farmers and ranchers in central Illinois and the Midwest. This is the Markets Club podcast with Joe Cap and Brian Hoops for Midwest Solution in Springfield, Missouri. I am talking with Joe Cap about the cash grains markets in central Illinois. Hey Joe, how are you?
Doing good. Thank you. Yeah, glad to join the podcast again, talking markets to close out here this month of February. Looking forward now into spring. A lot going on weather-wise as usual. And then politically, that's kind of been my theme of everything as we head into, another period of unknown, whether it's geopolitical unknowns and tensions in the Middle East or tariffs and trade policy or biofuels here at home. There's a lot I feel like that's about to break, if it hasn't already been freshly revealed. So there's certainly a lot to talk about. Glad to join you.
Joe, let's talk about the fundamentals on the cash grains markets with the trade barriers. And the yields is higher than expected, but what is your position on the corn markets versus the cash grains market?
Well, that's a good distinction to talk about. Well, what's the cash versus the futures and two different markets that's been, definitely highlighted for soybeans, where we have a strong rally. It's speculative based in part because you have these commodity trading funds piling in from the long side. But what does the cash market suggest coming after what you pointed to, which are these much higher than expected yields as they turned out to be at the end of last season? That was in play, of course, in January when we had that January 12th crop report. For corn, it was the surprise not just for yields going up, but those acreage misses that we had all season coming to a head. Ultimately, I look at the market still from the perspective and with the context of that January report day, because corn futures, they're still stuck inside that January 12 down day range. And so it does, take something else to break out the corn market in a bigger way. Soybeans, again, have had that speculative push and the will they, won't they on China, and also a lot of help, I should say, from bean oil futures as well on the domestic policy front. And so, yeah, going forward, I think I look at the cash markets as being very much regionally split and localized, and that's always the truth for basis and for the cash market as a whole. But seems like a lot of these divergences are even sharper after this last season. That includes these big crops that are still held out west with our farmers in South Dakota, a lot of corn stacked up, and generally better markets and therefore better basis in the east. Now we're looking at what's ahead and what could be a drier trend in the west and some weather issues that maybe bake into the market, but at the same time, not a whole lot to get the front end motivated to go a lot higher when I mentioned, as I did with the cash stock still held and ready to sell by farmers out there. Now, back home in Illinois and Eastern Corn Belt, we are seeing some relative strength to the west. I look at the seasonals basis generally just a touch softer, but it's got that feeling coming off this last big crop, coming along with the various points of worry about demand or USDA figures, you name it. And I think it's holding up, better than it could be, I should say. locally here at home. So yeah, pointing out different markets for different clients and thinking that the futures then is totally something another animal where yeah we have that guidance from the cash trade and the core supply and demand fundamentals, but there's also that added component of money flows and that being really remarkable here again lately for the soybeans as I started out the answer with. So that seems to be the rub of it for now. A good question to point out different between cash and futures always.
Do you have some thoughts about the fundamentals on the corn markets with these world events you mentioned before?
Yeah, a lot of world events. We start with, what's right in front of us, which is the possibility of greater conflict with Iran and these nuclear talks that have been start and stop. Ultimately, some extra risk premium being pumped into the energy market. So I connect that back, of course, to the ethanol sector for one, and we can see support for margins if we have higher crude prices for one. And we also have politically here at home the domestic policy aspect connected to biofuels. I mentioned that already with the soy complex and that being a huge driver of the soybean and soy oil, particularly strength there. But also now with corn and corn-based ethanol, we've got the movement on year-round E15 politically that we may have new developments on imminently. And then beyond that, the other component of demand, along with processing, being the trade outlook. And of course, all of these moving parts with tariffs, the Supreme Court decision knocking down the reciprocal tariff authority, but the fact that those will come back in different forms and that we still have progress on various trade deals. No matter what's going on for corn, you just have to take a step back and be impressed and appreciate how strong corn exports are running this year. I mean, just talking about by and far record corn export demand and really good business with the likes of our top customer Mexico, but the usuals as well. The others like Japan, South Korea, Colombia, Taiwan, Spain. So that's one thing I think is notable about corn futures, and it was something I said after the January crop report route that a whole lot cheaper, and it's going to feel like we're giving this corn crop away on in the export market, and I think that did come into play to help turn the market around. That low prices are the cure for low prices in the sense that at much lower levels, I feel like for now it's less than fair value in the trade market, and we see that response for better exports. And so that's one silver lining and bullish point going forward is still trade demand for corn for sure.
Wait and see. We can do, but it is getting heated in the Middle East. I bet.
Yeah, yeah. I mean, with Iran and Israel, I just read reports in the news about Israel's our ambassador to Israel, Mike Huckabee, former governor, former presidential candidate. He having an email out to the embassy staff saying, basically, if you have any worries about a war with Iran, now is the time to go home, to evacuate. And so that rings the alarm bells. We know what can pop up and we don't know everything right that could follow when you're talking about war and the effect on markets, but it's going to remain a top issue, this drama in the Middle East. And not only that, but the connection still ongoing with the war in Ukraine, Russia and Ukraine now beyond 4 years entrenched in that war. So geopolitically, heightened global risk, something we got to watch out for in markets, no doubt.
Right onto this weekend.
Yeah, and that seems to be the case here lately. Is you go into the weekend and it's like, well, okay, what's going to happen? One thing that we know we're open for is a military action against Iran. And so that could be the first point of influence we start the new week with when we come and start seeing markets trade on Sunday night. It'll be a first look that everybody gives likely to the not only the stock market but the crude oil.
Do you want to talk to farmers about the current economic and demand as well? You know that the farm economy is not great for right now.
Yeah, when I'm talking with farmers, recently given a couple of different market outlooks, I think the theme has been hedging volatility and knowing your risk points, and then having a plan for both the good and the bad. And so, if I have a hedge for the good that could possibly come, one thing would be, talk about simple reownership options that, hey, beautiful weather. We've seen a little bit of a recovery over the past 6 weeks for the market. You may well want to deliver some corn, and if that's the case, seasonally, you got cash flow considerations, storage costs, all types of different opportunity costs. If you're moving grain, but you still think there could be this potential for upside on the board down the road, are we warranted to explore some of these sell the cash, buy call option or
What is the technical aspects on the cattle markets for right now?
the cattle charts have been really interesting. You've had some gaps to talk about. Gaps are those open spots on the chart where prices skip over trading, and we had one recently on the way up, which opened this island, and that looked like it could be awfully bullish when pairing it with the previous down gap, but then it was quickly a few sessions later lower. And here this week, we're seeing a clear break below the middle of the range. I watched the 20-day moving average closely. We've fallen through that to the downside and also down below the 50-day moving average. Very short run, we could start to talk about technically oversold type conditions when pairing, the poke below the lower Bollinger Band with some slower following momentum studies, for example. But so far, the overall turn lower in the market this week is remarkable too for having then stopped short this rally from completing a closure of the big gap down from the all-time highs we marked in October. So April cattle topped just above 250. President Trump commented that he had a deal to bring down beef prices. We gapped lower after that, made a huge move down towards 200. And then for most of December and this year up till recently, we were grinding higher back to that all-time high again. So this latest development certainly leans a bit more negative.
How about the fundamentals on the fats?
Well, the delivery period was in play for February live cattle this week. They expired today at 244 even. They were, though, before these last couple of sessions, converging back upwards towards a really resilient and strong looking cash trade. So you're talking about 247 benchmark up to 250 in the cash. And you look at the April having converged towards that, but then fallen off. And then now, after this previous Friday's break to 232 and some change for April, that is a $10 plus discount now that the board's going to bring in under the cash trade. So we'll see what follows from here. Seasonally speaking, it's oftentimes in February that the futures market puts in a top, and you get cash to follow not long after. And so I'm watching that dynamic as we head in to the spring now. Still very fundamentally short and bullish for that respect on cattle numbers. We've still got a lot of good things to say about consumer demand, both domestic consumers and beef export customers. But yeah, the latest price action paired with the fundamentals of the seasonal point of the year that we're thinking about fits with the recently lower break for both live cattle and feeder cattle.
Do you have some final thoughts about this crop as the beans?
Yeah, the beans are going to be the leader. I mean, it wasn't last week on Friday. All of a sudden, wheat took off, and there's a lot of talk about short covering, not just in the U.S. exchanges, but internationally speaking. Still, though, it's going to be soybeans in my mind, and on two really big factors. One, trade with China. Do we see any of those flash sales pop up? Do we see that business come despite the price spreads that we mentioned with Brazil? And then two, does the bean oil rally continue? Do we have further development on biofuel policy like we do expect imminently into March, that final ruling on the renewable volume targets? So there'd be those items of processing demand competing with soybean trade and deciding whether or not that rally continues and helps buoy the corn and the wheat further or not.
Thanks, Joe. I am glad to have you again.
Yeah, thanks so much. I'm glad to. It's fun to join you, and I'll look forward to hopefully doing it again.
This is Joe Camp for Commstock Investment on the Market Club. Thanks to Joe Camp for Commstock. This is the Markets Club podcast with Brian Hoops for Midwest Solution in Springfield, Missouri. Brian explained to us about the outlook for corn and beans wheat for this year. Now, we were talking about the planting intention report on March. This is Brian Hoops.
Hey, Caesar, it's good to talk with you and
Hey,
be on the
Brian.
program. Hi there. Good to talk with you again. I'm always excited to be on your program with you.
Good to hear from you again. Brian, let's discuss about these fundamentals on the corn markets for right now. What is your thoughts on the funds?
Well, yeah, this corn market has rallied. We're right back to where we were right before the January WASD report that was so bearish and had such a knee-jerk reaction as far as the old crop goes. So it's nice to see this market recover and push us back to where we probably should be trading back into the 450, 465 range on these old crop. And the new crop, in fact, has moved to new highs today, taking out the old resistance at the November highs. And this is the highest level since last summer. We've had almost a 30-cent rally in that December corn. I do think producers should look at this rally as an opportunity to make some sales. Last 2 years, we've seen the highs being made in the month of February. And I know we're March the 3rd today, so we're a little bit past that. But I don't want to go into the entire spring and summer with nothing sold and betting that you're going to see a weather market. This is an opportunity, 470 to 475 up to 480. Make some new crop corn sales, lay off some of the risk. These markets are extremely overbought, very sensitive to latest headlines, and we could see something political, some sort of a headline that would pull us off of these highs. I know we have great demand, we have great exports and good ethanol usage. But again, um, there's a lot of things that could change that rather quickly. And maybe we plant more acres this spring than what we intended to. I think the market is trying to buy a few acres here of corn and soybeans as well. So, really, from a producer standpoint, now is the time to start laying off some of that risk. At least get started 5, 10, 15% of your production.
How is the technical buying in the beans market for right now with these world events over the weekend and the corn markets as well?
Yeah, soybeans, another market similar to what we talked about in corn, where it's been a strong rally. Now, of course, we have the China component to all this, where China made a trade agreement with the U.S. to buy 12 million tons of soybeans. They've done that. There's been some talk that maybe they'll buy more than that. And next year, they're expected to double that over to 25 million tons. So the new crop soybeans pushing above 1130, that's a good place to start making some hedges. But this market is another one that's trying to buy some acres this spring to meet that extra demand that we're going to see from China. But this market, back in January, early part of January, we were trading 1065 on July beans. We're 1184. We've rallied $1.20 in that time frame. You really have a producer. It really should reward this rally because you may not get a lot more opportunities. We know South America is going to have a big crop, and they're starting to do some harvesting, and their harvest is progressing. A lot of that crop could hit some of this market and take away some export business from the United States. It usually does as we get into March and April. It overtakes U.S. Export business. I really feel like producers start now to start being defensive. Back in January is more of a time to let's let the market develop, let it rally into the spring. Now we're in the spring time frame. The market's rallied. It's time to reward that rally.
Of course, wait and see. We can do Brian, but it's up today on the beans markets, Brian.
Yeah, we hit like the soybean market here. We've seen some South American hedging pressure. We're starting to see a little bit of farmer selling as well to cap these rallies. What the big thing I think that has given us the rally in not only soybeans, also wheat and corn has been fund buying. The funds are now holding a huge net long position in soybeans, over 200,000 contracts. And at the same time, they were net short big amounts of corn and wheat, and they've covered those positions. They're actually net long Kansas City and maybe getting close to being long Chicago wheat, along with corn. And so, sometimes you have these rallies where it's a fundamental hated type rally. Producers say we've got big supplies in the world. We have big supplies here in the United States. But when the funds buy back short positions, that creates a lot of upward momentum. Technical trends get broken, and they start moving to the plus side. Now, if we get these funds adding to the longs, that gives us another leg higher, which then you go into the summer, you may not have a lot of buying ammunition left into the summer months, and we may start to see the markets move back to the lower side at some point here this spring.
Do you have some thoughts about the beans demand for biofuel instead of China?
Yeah, using it, soybean demand is for a biofuel. It's really rallied soybean oil. This really that was kind of the darling last year, and it's been really the strong market this year. Back in December, we were in the 48-cent range on the May bean oil contract. Now we're trading over 62. It's been a big move higher, and it looks like there was some legislation that President Trump was pushing through to be enacted sometime here in the month of March that we are going to improve the renewable fuel standard, and we are going to use more biofuels, and that includes corn. So this is definitely a benefit, a big win for the corn farmer, for ethanol and corn usage in general. I think if you do see E15 being used year round, that increases your demand. That's what I like to put in my cars. A little bit higher octane boost that way. It's a big win here for bean oil producers. Now the job of the market is to produce more bean oil product so that you can meet this demand. And that's what we're doing. We're crushing a lot of the product between soybeans, meal, and soy oil, and they're taking those stocks, and we are building our stocks to a large degree of bean oil. So the increased demand, we're responding to that by increasing the supply.
What is your concern about the E15 year around if it has failed in Congress, Brian?
Yeah, it could. I don't know that it will. I think it's probably going to pass because this is something the Trump administration wants to push through, and they should have the votes to push it through. Um, yeah, if it doesn't pass, we could be sitting on legislation where we go back to only certain months of the year for E15 instead of year round. It definitely will hurt our demand um, going forward. So it's a concern for us. I think it does pass. If it doesn't, price is likely to react negatively in bean oil and corn both.
What is your position on the flour prices for the feeder?
Yeah, so you talk about the feeder cattle, they're faced with higher rising cost here of corn right now. So they're having trouble with that. That's going to be one thing that's going to be struggled with. Right now, it's very hard to buy a feeder calf and lock in even a break even. You're looking at most likely a losing proposition, and so that has slowed. I think the demand has slowed at higher prices. And if the futures start to back off like we saw this last week and early part of this week, demand at some of the sale barns of Oklahoma City and Joplin, Missouri, we did see softer prices. So they want to buy them at cheaper levels, especially when the futures market drops here. It's going to be a struggle to get to profitability, but I do think the second quarter is probably our best quarter of 2026. That's when we will have the max profitability, tightest supplies, biggest demand as the packer buys and accumulates inventory for the summer grilling season. And then after that, into the second, third quarters of this year, we may see a little bit larger supply, and that may mean at a time frame when demand is also a little bit less.
How about the fundamentals on the fats? But it is pretty overwhelming to the cattle markets. What is your thoughts on the cattle markets?
So I think overall in cattle, we're going to have a good, we've had a good quarter this year, the first quarter, and we'll finish out, I think, fairly strong. Um, as we go into the second quarter, April, May, and June, that's when I suspect our tightest supplies will be seen. Probably in that June timeframe is when the numbers will be the smallest that they are, and we'll also be gearing up for grilling season and the demand going into the summer. That's when I think you'll probably could see our highest prices of the year. Talk about spring or summer highs. I think they get posted in the second quarter of this year. And after that, then demand likely to soften, maybe more numbers become available. And I think prices could start to work lower in the second or in the third, fourth quarters of 2026. But for now, for the next 3 to 4 months, I think there's some good pricing opportunities for producers, some very profitable opportunities.
Yummy sounds good for beef.
Huh?
Do you have some final thoughts about this growing season?
Yeah, I think for producers, what I thought I would leave them with is, um, the highs last couple years have been scored in February. Several years ago, it was scored in May, June, July, and it certainly could be again this year, but only if we have weather issues. I think you're probably scoring your highs for corn, for soybeans, for wheat. All could be coming here in the month of March because of the volatility and the strength in the crude oil market and all this money that's pouring into commodities that we're seeing as just very cheap from an inflationary standpoint. We've seen the funds come out of their short positions on almost everything. This is a time where producers really certainly need to be making some cash sales of old crop, hedging some new crop, and starting to look at buying put options on that new crop uh, contracts of corn, soybeans, and some wheat as well.
We are getting ready for this planting season because it is approaching fast.
It is coming quick. Texas farmers are already in the fields doing some planting of corn, and a lot of 70-degree temperatures in the plains. So the wheat's starting to come out of dormancy. Here where I'm at, the grass is starting to green up, and yeah, it just will not be long, and we will be doing start talking about spring field work and planting in 3-4 weeks across a lot of the country.
Thanks, Brian. I enjoyed our conversation for today.
I enjoyed it as well. It's always good to talk with you. Keep up the good work. We're pulling for you, and congratulations on all your success with the Backroads of Illinois podcast.
This is the Markets Club podcast with Joe Cap for Comstock Investment and Brian Hoops for this week. I am Cesar Delgado. You have a great day.